Good morning. Welcome to Stock Market Today. It's Monday, November 30th, 2020. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I am at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. We also give you daily stock ideas to consider, and that hits your inbox every trading day before the market opens. So getting back into it after the holiday weekend, U.S. equities on Friday, mostly higher in a holiday shortened session as the major indexes posted a week of solid gains. On the day, healthcare, comm services, and tech led. Energy, utilities, and financials were underperformers. Treasuries were stronger with the curve flattening. Dollar was weaker against the euro and the yen. Dollar index is actually moving toward the lows of the year. Gold finished down 1.3%, settling below $1,800 an ounce for the first time since July 6th. WTI crude was down 60 basis points on the day. Now, as we get back from the holiday weekend, S&P futures are under a little bit of pressure here this morning, down about 40 basis points after that rally last week. Asian markets were mostly lower overnight. Hong Kong underperformed, down nearly 2%. Excuse me. European equities are also lower after rallying last week. Treasuries are unchanged to slightly stronger at the back end of the curve. The dollar is a bit weaker on the major crosses. Gold is down 70 basis points. WTI crude is down 1.8% to kick us off on a Monday morning after the holiday weekend that starts out really on the heels of a strong week for equities. And I have to ask the question, are the Qs getting back in gear? Now, we've seen the S&P 500 break topside through resistance and continue to grind higher. SPY has support at 340, then 320 below that. The Qs are kind of what's on my radar screen now because they've been consolidating, right? They are the one group here that hasn't traded at a new all-time high recently. You can see IWM, topside breakout through 170 and continuing to move higher. Support at 170, then near 160. But what is the message of the market if the Qs now start to get into gear as well? And we have small caps trading at records, S&P trading at records, and then all of a sudden the Qs getting gear as well. To me, that speaks to the breadth of the market, right? We've been talking about it for a while, how the expansion in breadth as markets have moved higher. Remember, one of the biggest knocks on the equity market really since making the lows in March was that concentration of leadership and concentration of strength in the Qs and in the biggest, mega caps within the marketplace. So now you have small caps in gear, you have SPY working higher, you have the value theme working. If the Qs kick in as well, I think that sends a pretty powerful message about participation to the upside within the market. So we're kind of watching this 300 level on QQQ. Down below 260 is support, though as we've been saying, as long as we're above 280, we increase the odds of the September highs coming into play, and we are very much near those levels here as the final day of November begins and as the new week begins. So that's something that we're going to continue to watch extremely closely. And let's hit our market in a minute. What are we writing about today in our note for Chaikin Analytics clients? Well, stocks are trading at or near record levels as those consolidations have resolved higher. And that's also playing out as traditional haven assets are under pressure. Think gold, think treasuries. They are under pressure here, right? Gold is broken important support higher and is now testing an even more important support level, as we'll look at a little bit later on in the show. Treasuries have been under pressure for some time. Even the dollar is on the verge of 52-week lows, and they have had an inverse correlation to risk assets really since topping out in March. Crude oil has actually broken resistance, and that's pulled the energy sector higher over the past few weeks. And as I said, futures do point to a lower open here today. Taking a look at the major indices now from a power bar perspective, green across the screen in a half day of trading on Friday. Remember, the market on Friday closed at 1 o'clock, at least the equity market did. Dow added 14 basis points, 4-2 bulls to bears there. S&P 500 up 0.25%, 124 to 47 bulls to bears in that front. The NASDAQ, 17 to 10 bulls to bears after adding 90 basis points and outperforming on the day on Friday. Small caps, an outperformer as well relative to the S&P 500, tacking on 48 basis points. Look at that power bar ratio, 839 to 171. Bulls to bears for the small cap IWM. Bonds uptick, sending yields lower. According to the Chaikin Power Bar, small cap stocks and large cap stocks are strongly bullish. Major indexes across the board are mixed. Let's hit our stock of the day now. Those of you longtime followers of my work know I watch the semiconductors closely. So semis have been strong. They're trading near an all-time high. Drilling down on some names within the group, especially maybe some of the lesser followed names or the lesser known names. Cohu, Cohu, the ticker symbol here, added 3.66% on Friday. Very bullish rating, strong trend above that rising trend line. Strong industry group. We know the semis have been strong. Take a look at Cohu here. Topside breakout through resistance at $26, back test, and then a rebound. Now the stock is oversold based on our overbought, oversold indicator, while Chaikin money flow is solidly bullish. So we have a very bullish stock outperforming, becomes oversold with bullish money flow, and actually triggered one of our buy signals today, the money flow buy signal here at Chaikin Analytics. So to me, that's a compelling setup, right? We have a leading stock in a leading area of the market. Topside breakout, holding above the breakout level and now beginning to work higher once again. I think you can frame it up pretty easily. I think as long as we're above $26, this stock's odds are that it's going to continue higher. Is it guaranteed? No, nothing's guaranteed in the market. We know that. That's why risk management is so important. But, when we're thinking about setups and thinking about adding exposure within the equity space, and we're thinking about looking for new ideas, this is a setup that appears compelling to me. Take a look at Cohu, C-O-H-U, the ticker symbol here, featured in my note, featured here for you on the show. Turning now to the sector tracker, movement of the major sectors over the last 5 days. Energy and financials have had a solid run over the past week of trading, followed by materials and discretionary. Middle of the road, comms, industrials, and tech. Staples, healthcare, and Utes also higher, but lagging. Real estate lower, and obviously lagging as well, as the market turned in a pretty solid week last week. So again, the board here remains interesting. Good mix of your cyclical value plays towards the top of the list, while your kind of more aggressive plays in and around discretionary comms and tech are holding in as well. And as I think back to what I said a few minutes ago about the Qs, I mean, if you have these cyclical value areas now coming on, right, as they have been over the past couple of months, and you get the traditional leaders to begin to get back in gear, I think that's a powerful breath message from the market. So it's something we want to keep a close eye on as we kind of continue to favor this idea of a melt up into the end of the year. Now, our industry in focus today, biotech services, past 6 months, been an outperformer, leading the S&P 500 by a little over 7%. Power bar ratio is weak, however, with 31 bears to 12 bulls, currently ranked number 20 of 21 subsectors. So stock selection does become important here in my view. Stock selection is always important. Sarepta Therapeutics, very bearish. Inovio, INO, very bearish, and Syros, SYRS, also very bearish ratings here at Chaikin Analytics. But the fund itself has a neutral rating, and as I said, it's been an outperformer. Neutral rating, strong trend above the rising long-term trend line. We have a nice topside breakout here. I think what tends to happen here, especially with biotechs, is you have a lot of smaller names, maybe little to no revenue, right? So in a quantitative model such as the one that we use, you're often going to see a lot of bearish individual names, just given that, right? Like no revenue, or probably little earnings, or in some cases big losses. Those are obviously not going to screen well in a quantitative model that uses fundamental metrics. So, I think we have to rely on the charts here as well, especially for the group. And I mean, there's no two ways about it. The group itself is trading at an all-time high. It's outperforming. It has solid money flow. So it is an interesting theme, but drilling down to the individual stock level for those who do will be very important. Let's take a look at our trending names now. Friday's movers and shakers, our gainers and losers. Online retail was strong. I think that's the big story of the first weekend of the holiday shopping season. Etsy up 10.75%. Carnival Cruise Lines up 6.05%, part of that reopening trade cadence. Didn't see anything company specific there to take that stock higher by 4.3% on the day. Illumina, some positive news from Grail, which is the company that Illumina is targeting as a buyout. So that sent Illumina higher by 4.3%. Tractor Supply, nothing company specific there. That stock higher by 4.08%. I will note that kind of the ideas tied to the ag theme have been strong. You can look at a name like John Deere as well, DE, but TSCO up 4% on the day. Loser side of the board, really nothing company specific. Energy's had a big run and gave some back on Friday. So that weighed on Diamondback, FANG, FANG down 4%, Hess, HES down 3.5% or so, and National Oilwell Varco, NOV, down 3.3% on the day. I think a similar dynamic at play in the banks, right? The banks have had a big run of late, a little bit of profit taking, maybe a little bit of money rotating back into those tech/growth names. Zion's bullish stock comes under pressure, 3.6%. Comerica, CMA, another bullish stock under a little bit of pressure, some profit taking there, down 3.4% on the day. Let's dive into the charts now. Now we touched on equities, right? We looked at SPY, Qs, IWM, all trading at or near all-time highs, with consolidations looking like they're resolving to the upside. But what's the message from some of the other asset classes? I always think that that's really important to pay attention to as well. It's intermarket analysis. How do these different themes play off of each other? And I think it's important to kind of pay attention to what's happening there. And what we're seeing in my mind is haven assets under pressure. Take a look at IEF. This is the iShares 7 to 10 year Treasury bond ETF. So the prices of Treasury bonds within that kind of maturity time frame. And you can really see it's really been nothing doing, right? Since that explosion to the upside, right? That safe haven run as the COVID news was first taking hold, right? And then some volatility in the throes of March, and then basically a steady consolidation and now beginning to roll over, right? So if investors are coming out of haven assets, right, that to me, as equities are trading at or near all-time highs, I think that that's a pretty compelling message. Take a look at the RSI for IEF here, trading in bearish ranges, right? So momentum confirmation to some of the weakness that we're seeing. And on a relative basis, you're seeing the fund underperform equities, right? So kind of consistent with the message that we've had here over the past few weeks/months of a more risk-on, favoring equity type environment. And you can see it here in the havens as they are under pressure. Take a look at gold, right? Gold certainly considered another haven asset. This is the continuous contract, right? Since topping out here in August, September timeframe, really the August timeframe, it's been a steady consolidation/move to the downside, broke below the 50-day moving average, which is now moving lower, and we're testing the 200-day moving average at the top end of a support zone. So what happens to gold from here, I think this is an important level. This kind of zone of support will be important to gold bulls, right? To kind of keep the structure of the longer term uptrend intact. They're going to want to see this zone hold. What's interesting to me is the gold weakness is playing out as the dollar is weaker as well. I think, again, the message there is haven assets coming under pressure, right? The dollar topped right as markets bottomed, or equity markets bottomed back in March, and it's been a steady decline. So you've had this inverse correlation between the dollar and risk assets, right? So risk assets moving higher while the dollar has moved lower, and that has also played out as haven assets like Treasuries and gold have moved lower as well. So an interesting confirmation from the intermarket look here for what's playing out across asset classes and across markets. I think it's really important to pay attention, right? And then kind of finishing up with commodities in general, take a look at the CRB, the commodity index. Topside breakout from a consolidation produces an overbought reading on the RSI, and the CRB is actually, been performing in line with equities since May. So that's an interesting dynamic that's playing out. I think it points to a little bit of a risk-on type environment on the part of investors or within the mindset of investors. We're going to watch that 155 breakout level closely. So welcome back from the holiday. It's good to be back after 5 days. Take us for a test drive. Head over to chaikinanalytics.com/test drive. Hope everybody has a great Monday. Hope everybody had a great Thanksgiving and a really good holiday weekend. We will be back with you tomorrow. Be well.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.